Aloha, everyone, and welcome to Java. It's Friday, November 3rd, 2023. But before we get started, I wanted to send out a very special thanks to my friend Greg Manorino. Again, he put us in the newsletter so that this could grow here, so we can get the word out and spread the truth a little more. And I'm so indebted to him for not just this, but all of his work that he does. If you don't know who he is, please check him out. The Robin Hood of Wall Street, Greg Manorino. I'm going to leave a link in the description. He did create our favorite risk indicator that we always start with in the morning, the MMRI. And so with that, we will move on. But I just wanted to thank everyone that's new here. I hope you enjoy the content. Please feel free to leave me feedback. I do appreciate that in the comments below, and I do try to answer as much as possible. So with that, we are still in extreme risk. However, it's come down quite a bit in this past week, especially with the market rally in the past couple of days. And part of that is because the dollar strength and the 10-year yield have both retraced considerably. So we've also got a main story in the credit risk gauge dropping the most since August on the Federal Reserve decision to hold. And for them, though, they're using 5-year CDS for some of the larger companies, but I like the MMRI, keeps it simple. It's based on the dollar strength and the relative dollar strength, the 10-year yield, as well as the golden ratio, which I'm always a fan of. I like Fibonacci's as well. So going to our markets, we had, as I said, a bit of rally on the back of the strength of these two. And so while we're green now, the volatility index dropped. We are at an upper range again for the markets. And we can see this in the futures that they believe there's also a bit of a pullback to happen before continuance. So the big thing today is the jobs numbers. So how are they going to report these is going to make the difference. So the jobs forecast is for 170,000 new jobs in October and 3.8% unemployment. So the sentiment right now is positive. It's risk on. People are purchasing stocks going into the markets. It is going to be volatile today. It's Friday. And we do have options expiring. So 3 p.m. Eastern time, it will get very volatile as market makers attempt to bounce out both sides, both the longs and the shorts. So we'll be aware of that if you are a trader. If not, one thing I would like to say about these jobs reports is that when they bring these out, first, the numbers are skewed, but second, even if they are not, it seems they tend to forget these are actual people that are losing their jobs. And the federal feds are basically geared towards more people losing their jobs, so they cannot spend money because that's what will bring inflation down. So just keep that in mind. These are people. So for the calendar, and most of these are happening prior to the market open there at 8:30. Doesn't open for general trading until 9:30 Eastern time. And then we're also getting PMI and some services. Also got Fed Vice Chair Michael Barr speaking. And if they need to kind of adjust the market, they'll come out and say something. And then depending on what they say can move markets. So job numbers again. So we've got the Target CEO coming out saying shoppers are pulling back even on groceries. So those are kind of the last item that people cut back on. They'll cut back on all their discretionary income first, but we've got some conflicting stories that tells me things are beginning to happen when there is volatility on both sides. So we've got JP Morgan CEO Jamie Dimon warning about inflation, that it may still persist and they may still need to raise interest rates further. I agree, especially looking at energy, the oil sector, if that continues, they may decide to hike again. Flip side of this, we've got what they're saying, deal-hungry shoppers to squeeze holiday sales growth to pre-pandemic levels. So they're expecting a lot of holiday shopping, but on the lower end are bargain purchases. And boosting this also, we've got Amazon, although this is kind of geared towards small businesses. They're offering the option to buy now and pay later, basically a different form of credit, short-term, easy qualified credit for small business owners. But people can do this now to finance their cup of coffee at Starbucks, which has also created good revenue for them. So, especially if you're new here, a couple of indicators I like to look at for what I call the real economy, the real indicators of what is actually going on is shipping. And so Maersk is one of the larger shipping companies internationally, and they're talking about cutting at least 10,000 jobs as the shipping boom unravels. They are talking about slowdown in a major way. So aside from them, they are global shipping. We've got Federal Express and Uber Freight. So these are both local shipping companies, warning of worldwide recession last year and talking about how he's kind of revised his views. But all he's saying basically now is that it's just been pushed off, which is what I agree with. With all of this inflation and spending, the government spending these wars, they've kind of put it off and distracted, but it's still ahead. We've still got this recession coming in. The point, how deep it cuts, will determine whether they call it a recession or depression. They'll probably never say the D word. We'll see. But what they're pointing out is basically fuel costs. They're leaving less for margin. And this is right after trucking company Yellow entered bankruptcy not long ago. And then there's also some smaller trucking and shipping companies that have since just closed completely. So in the crypto space, we've got some news here. Of course, you've heard Sam Bankman-Fried was found guilty on all 7 charges. Maximum time he's facing is, I believe it's 110 years. So anyway, they did find him guilty of all counts on fraud. So that will be interesting. Could hit the crypto side of it a bit, but I expect recovery from that. And then we've got this story for everyone that loves XRP. Ripple is going to be used to power Georgia's central bank digital currency, the Lari. So this is, of course, the country Georgia, not the state in the United States, but they're starting their CBDC, which we all know is about for control. And once they turn these internationally, they will be turning up the controls on them. However, they just want to get these started, and we'll see where they move from there. On the side of real estate, what we're watching, again, the Evergrande decision for the commercial banking loan sector for China has been put off until December 4th as to whether they will be forced to liquidate, which will include the inventory. So even without this, we've got dirt cheap, this story about distressed housing buildings could get only the cost of land, and this is by Barclays. So I also saw some numbers a little earlier that in Denver, 1 out of 3 office floors for office space is two out of 3 is vacant. So only 1 out of 3 is occupied. So this is really, really large issue. We knew it would be the commercial office space. Some is being converted to residential, but there's structural challenges in that. So I think it's beginning to see the headwinds. So in the other story, we were talking about the biggest threat to global order since the 1930s is underway, and every CEO is talking about it. So of course, this is global. They're talking about geopolitics and bringing in the war. Well, war is inflationary. All of the spending, everything that's going on, and it is a huge, huge method to distract the public and keep them from paying attention to what is really going on. So aside from sending war producing, this has boosted the United States GDP, but it's also big for energy inflation. So we got to keep an eye on that. Along with that, this is something that I've long been watching. If you have not seen this video yet, it is on Twitter. If you're not on Twitter, I understand, but I've got basically 2 shots here. They are talking about artificial intelligence. So it can be a good thing, and this is the downside. This was completely created with artificial intelligence, and it shows in the video how they use this fake thing to go over it, how it affects the flames. You can see the flames changing in the background, but completely generated image. And the fear and what's going on is that these can be created to sway people's opinions, particularly horrifying images for war. They are built for an emotional response, and it is made to turn people against each other and divide us because they do not want us paying attention to what is really going on from the top. So with that, I just want to urge a little caution in what it is that you're seeing. Don't take it for face value. I always try to be cautious in what I get, and I will leave that Twitter link below for those of you that do have it. With that, I wish you a green trading day, just wonderful day in general. Again, thank you for being here, and until I see you again, stay free.